All right, what's going on, guys? This is Matt back again, and today we're just going to do a recap of basically just a price action study of what happened today, Monday, the 10th of January. Okay, so just a price action recap, and that's what I'm going to be doing throughout the week. And then on the weekends, I'm going to be doing the WWA kind of reviewing of their trades on their Instagram there. Like you guys have seen before. But these ones are going to be basically just reviewing the day. And I think that these are super important. Maybe at the end of every session, you can come over to the channel, check it out, see where you went right, see where you went wrong. And I'll be sharing my mistakes as well, because I'm by no means perfect and, make mistakes literally all the time. This is exactly why I actually started this channel, and because why I started this the Telegram is to kind of sort out the things that I'm doing wrong and put it in a kind of a public light, because if it also has the potential to help people out, then that's amazing. But I'm by no means saying that I'm a guru or anything like that, a teacher. I'm just doing this selfishly for me, so I can stay committed to the logging process, the trade logging process. And again, if throughout that it helps you guys out, then awesome. That just makes me super happy. So that's why I started this, and that's where we're going with it. First of all, though, I wanted to open up Telegram. So if you guys aren't in this group yet, this is the one I just started. So far, only six subscribers. But basically, I'm gonna be posting all the videos in here if you guys want to catch them and get a ping to your phone or whatever when they're released. But also at the end of every week, I'm going to start doing these breakdowns of the weekly cycle, and then also the daily cycles, and kind of really breaking down exactly what happened and which POI is held at which times and why the timing and everything is super important, breaking down. So again, this is just more like my developmental journal for myself, but I want to be posting it in the public, because again, if it can help you guys out, then I mean, that would just be incredible. And just get two birds stoned at once, help myself as well as help you guys out. So, if that's the way that it works out, then great. If not, if it's just for me and it only benefits me, then, it's a win-win for me. So that's all that matters. So if you guys want to join this, it's going to be left. There's going to be a link in the description. Okay. So feel free to join. Again, stop by and look what I have to say, and then you can compare your notes and see where, see what you were looking at and compared to what I was looking at. Anyways, I don't want to get onto too big of a rant there. Just want to keep going and start off strong. So today was a really interesting day, actually, in the markets. So first of all, I'm just going to start off on the 1 hour here. I don't think we need to go any higher. Actually, you know what? We do. I'm going to start it off right here, okay? Because this was the beginning of the beginning of the week. It was actually this one right here. See, boom. Week started, went back up, mitigated, came back down. So there's actually a nice trade on Sunday, but I don't trade Sundays. But it was there. It was present. So initially, what I was anticipating at the beginning of the week, or on Sunday when I did my analysis, was that this daily range, right? We had a consolidation, we had a sweep, we had a breakdown on daily structure, significant daily structure. Then we had this consolidation, obviously a lot of liquidity pooling right here. We had this very clean leg up. I was very convinced that what was going to happen is that, or was that this right here, because we stopped right here at the beginning of the week. I thought that this was going to be used as an inducement to fill up any imbalance that was above here. So let me just turn that to the red. That's my imbalance right there. So you can see, I thought it was going to come up, stab above that, fill in that imbalance, potentially fill in this order block up here in this. You can actually just refine that to this right here, this little hidden order block there, hidden base, whatever you want to call it. And I thought it was going to do something like this, right? Maybe do a little support and resistance level like this, bang up, and then absolutely melt at least back down to here, probably get some retracement, and then back down to start taking out these lows and all this liquidity here. So that's what my original anticipation was. So I had this zone marked off above here, and I had this down here as well. This is the 4 hour level, right? So I'm just going to mark that off like that. And so why am I just marking off this level? Again, you can mark off the whole thing if you want. If you want to just do the hidden base, it's going to be like one of those. Essentially, it's going to be like that. But that's really just the whole order block, or you can mark it off that whole thing like that. Whatever you want. but for here, this is going to be, I know that these are going to be my responsive zones right at the 4-hour fill. And so I'm just going to mark that out right here as well. Okay. Just show you what I do in real time. So this is the 4-hour fill. And then if I just copy and paste that down here, this is going to be my OB. So the whole thing is really an order block, but I like to call the body the order block because that typically does get mitigated. However, there's usually a decent reaction and potentially it can reverse from that fill. So I'm always looking at that as well. So anyways, these are the levels that I'd marked out. But one thing I did miss with this, where I could have anticipated that this high was actually going to hold and this was going to be the strong high and not be used as an inducement, was this. You look at dollar index right here, and you can see that this high right here is equivalent to this low right here, right? And then this low right here is equivalent to this high right here. And what you can see is that dollar index actually made a lower low. If I straighten out the thing, you can see that the candle dabbled right through it. So it actually did make a lower low. Now, if you're looking on Euro US dollar, the foreign currency pair, so it should be exactly, or not exactly, but highly negatively correlated. So you're anticipating that this should break up as well, right? It should be a very similar thing, just the opposite of what's going on with dollar index. Now, the fact that we made a lower high here, what that means is that there's a crack in divergence. And so we could have anticipated that this was actually going to be that strong high, or this was going to be that strong high. And so with that, there was a potential entry down here. And the fact that this was such a clean leg right here, all this imbalance, there was a lot of room to go down before you could, move your stops to break even or anything like that. There's a lot of room to work with here. So definitely something that you should be looking for the shorts. Additionally, this was also a news candle right down to here. So the news was injected into the market. It was at 8:30. 8:30. So it was actually within this black candle, but it was somewhere around here that's when the news injection came in. So typically on news candles like this, they get filled, right? They get filled right back up. So again, if that's these are all things that in hindsight, I wish I was looking at a little bit more in depth. There's something I kind of passed over. I was really just dead set on the fact that this was coming up to here and this was going to come back down like that. So that was my own fault. I got my own way there with my personal bias. Sorry. So yeah, it is what it is. But these are going to be the levels that I'd be looking for anyways on the daily interim structure. And you can see that 4-hour fill is exactly lined up with that 1-hour fill. And you can see it's the last imbalance right here. If I just mark that out as well. Okay, so it's going to be the last imbalance too before a significant level. So we can be very, very confident that as soon as it gets down here, we're probably going to get some sort of reaction. However, we want to see how the daily cycle and everything develops, right? So let's go down to the 15-minute here. What do we see? And this is what I was talking about before, actually. If I go in the 5-minute, you can see it. Look, we had a sweep on liquidity. So now we had confirmed divergence as soon as the structure breaks. Boom. Structure breaks right here. What happens? Breaks down, comes back up, sweeps these highs. Did it mitigate out of this, or was this already mitigated? Yeah, this was already mitigated. Comes back up, sweeps out all these highs, breaks back down. Comes back up, mitigates these highs, sweeps this high, breaks back down. So as soon as you break structure again, like this is it's just clear bearish order flow. Okay. So it's just clear bearish order flow. Again, the next area that I would be looking at is somewhere within this, right? Somewhere within these down candles, because that's just going to be an order block on a higher time frame when you have consecutive down candles like that. So if we break that down, then things change. But you can see that that's exactly what happened. So this was during Asian session, which of course I'm not going to be trading, especially if it's not, or especially if it's in on a Sunday, right? So, but let's just look what we did here. Okay, this is super important. Look on the 30-minute, and if you're looking on 30-minute, right, this is the structure. This is the last kind of order block that's there. Now, what happens is price breaks below it. That should initially have put me in right into a bearish state of mind. Additionally, not a bearish state of mind, but I should have been at least more bearish, and meaning that this is very likely just to be a pullback up into here before more downside and before targeting the daily liquidity and then the news candle liquidity. Additionally, if we look at, I brought it up in the video before, when you have, and this is something I learned from ICT. Obviously, he has it on his free channels, the market maker sell model. You have this essentially equivalent structure on the buy side that you will have on the sell side, right? If you look at the buy side here, and then you look at the sell side here. And again, we're gonna do it like this. Okay, so blue is buy, red is sell. You can see that on the buy side, we have a consolidation here, and it consolidates it relatively at the same spot. Then we have this consolidation. You're going to get below it and sweep it and consolidate relatively at the same spot. There's also going to be some micro ones up in here as well, because this is going to be its own market maker sell model up in this point here. Okay, and that's really important to note, because it kind of gives you a sign of where price is going to be reversing from. And so if we look at this right here, right, if I split this right down the middle, what do you see here? Boom. Right? So we should get some sort of correction, and potentially this is where it's going to be. That's going to be our entry for taking it down. Again, what lines up with here? We have this beautiful, beautiful imbalance fill right there, which we can refine on smaller time frames if we'd like, right? And then what else do we have? We have an inducement right here. Okay, so we have this little high that's going to be creating structure, right? Think about it. If people are going short, this is the structure, right? So this is where there's going to be some orders resting. Their stops are going to be above here. That lines up beautifully with our level right here. And again, if people are long from this level, think about it, long from this level, and then they came back down, potentially wanting to long some more from this level, and it breaks through, then institutions, if institutions are in that position, which who knows if they are or not, but I'm just saying if they are, then what's going to likely happen, a likely footprint will be that they come up to re-mitigate out of these levels, meaning if they were in long, they don't mind being in that drawdown, they'll bring it right back up, mitigate out of those positions, and then continue down with the significant move down to target the key liquidity levels and objectives for the day. Okay, so that was the idea, or that should have been, that's what I was looking at. And I'll tell you why. I got into a trade here and I got out majority of my position up in here. However, I should have been more aggressive with the sells, and then I could have actually taken the sells down, given that there was some opportunity to get in based on my model. However, it's only Monday, so I'm not too stressed out. Anyways, tangent over. Let's see. You can see daily open start. So this is 12 midnight Eastern Standard Time. What happens? We dabble right into that imbalance. Boom. We hit our 4-hour fill. At this point, I'm going to be going to higher or lower time frames, right? I'm going to be seeing, okay, what's happening at that 4-hour fill. I know that there's going to be some liquidity there. And I know we just swept 4-hour liquidity into a 30-minute, 1-hour liquidity here. We swept it into a 4-hour zone. If we're in a 4-hour zone, we can at least anticipate a 15-minute break-in structure, right? To go grab liquidity, which is right here. At least we can anticipate that if we're in a significant level on the 4-hour, right? So essentially what I'm going to be doing is I went down to the 15-minute and I saw, again, another equal highs kind of forming right here, i.e. liquidity pooling. And so on an intraday time frame, this was just gorgeous, right? Because now I have my buy model. We're in a higher time frame point of interest, right? Let me just mark it out here. Okay, actually, I'll take this off so it's easier to do. Okay, so we're in a higher time frame point of interest. What else? We have time of day. Okay, so the time of day, when I'm looking at this cycle, the way that it is, this is going to be a London cycle. Look what time I'm anticipating the potential low of the day to come in, right? This is 3 a.m. New York Standard Time. It's going to be between 2 and 3 a.m. New York Standard Time. Eastern Standard Time, when price aligns, okay, so price is aligning with the 4-hour order block. At the same time, it's at 3 a.m. in the morning when that typical London sweep comes in. Okay, now I have higher time frame. We have the time of the day. We have the POI, the actual price action. We have time of the day. And now let's go into, do we have any lower time frame confirmations? Well, what we want to see on our lower time frame is going to be just a buy model, right? And I think we've discussed the buy model before, but essentially it's what a bunch of guys have talked about in the whole trading space. And what ICT talks about it all the time as well. It's essentially that the AMD, right? Accumulation, manipulation, distribution. But what we want to be seeing is an inducement, and then that inducement provides the liquidity to sponsor that POI. Providing that liquidity to that POI is hugely important. So then it can fill your orders. You're filling your orders and you're coupling them against the retail orders. Okay. And that's super important because you want to be on the right side of the market. And that just validates it too, especially if it's in close proximity, it makes it way higher probability. Okay. So that's the buy model, that we'd be looking at. So simple. We have our higher time frame point of interest. It hit at the exact right point in time of the day. We have some liquidity pooling up at the highs here that we can definitely be targeting. And now we just go on to the smaller time frame. Like, do we see anything like that? Well, the first thing that I see from right here is this sweep and this break in structure. Now, any POI? Well, there's a nice imbalance here. It actually got filled right here, just to the wick right there. But to me, what this is a support and resistance level, right? So again, you could have easily taken this, right? And if you took it, there's no problem with that at all. That you thought that this in real time, that this was the inducement, this wick came back down, and you took it from right here, right? You took it right from this block, no worries. 3 pip, 4 pip stop, no problem. Targeting all the way up to here, it's gonna be about a 5R trade, right? And again, you look at over here, we can even refine this just down to the last imbalance, which is right there. So we can just move our target right up to here, a 5R, right? Nothing wrong with that at all. However, I was actually off my charts until this, and I got an alert that went off right around here because I wanted to see structure break. And so I was off the charts. And then as soon as I got in, or as soon as I got the alert, I came back to the screen here. And what I saw was that this was potentially an inducement, and we still had this imbalance in here. And these last 2 down candles are going to be the mitigation block. Okay. So those are going to be the mitigation block. And let me just take this off here. You can see this is our 4-hour fill. We also have another little fill basically lining up perfectly with our 4-hour fill. And at the same time, that's about 50% of our mitigation block. Okay. So we're getting a lot of confluence up in the 13-230s level. And this is why I entered a trade right here with my accounting for spread. So entered right off there, but plus spread. And it was about a 3 pip stop. Okay. It was a 3 pip stop. And I actually just targeted up to here. Okay. I took off majority of my position there, and I was going to hold it because when it was going up, I figured, okay, this is the perfect buy model day, where today we just created this downtrend for Frankfurt. And then as soon as London opens, right, the 2 to 3 a.m. time zone, what happens? We get this this sweep right down into our higher time frame POI. We got our beautiful buy model. Okay, we take that up. It was going like this. I figured that we were just going to correct and go and continue up to take out these highs. However, again, if I was more aware of the fact that this diverged on the higher time frame, I could have been way, way, way more cautious and way more conscious of the fact that if this breaks down, then we have confirmed bearish structure, and I should be looking for sells only. But sometimes that happens. So what do we get here? We get this beautiful move down. You can see mitigates that level. Immediate consumption, break of structure right here. If you didn't enter on that one, or say you were kind of hesitant to enter on that one, what you can do is you can wait for some bullish order flow to form right here. You can see if this breaker block is going to hold, and then we make a higher high, potentially we can enter right off that mitigation. Boom, just like that. See how we had this break-in structure now? Right there. Now we can take that first mitigation out of that level. What I would do is I would put my entry right here, again with spread. So if you have a 0.3 spread, then you'd want something like there, okay, something like that. And then put my stop about 2.5 pips. And again, where's the target? Up here. So if it gets back down into this level with spread, you would be hopefully tagged in there. Yep, there you go. And then we take out this weak high right here, because this whole thing right here is going to be the trading range that we wanted to be dealing with right here. Okay, so here's the trading range right there, because again, just like on the daily, how we had the same thing where we had a consolidation, a sweep, break up, break back down. Now this becomes the weak high. This becomes the target. So as soon as it breaks above this high, and ideally up above this high, I would be a little bit more aggressive with the profit taking. And so I took 50% right there, right as soon as it wicked through, as soon as it was above there, I took 50% of my position out. I didn't enter this second one actually, because again, these ones are trades that I'm currently testing now, these kind of continuation trades and higher or like 1 minute mitigations off of a bigger zone. I usually just catch these ones, but I'm definitely testing these ones. I've seen them work out so many times. So, hopefully this live journal will show it, and maybe you guys can get in some of them too. But anyways, you can see it goes up beautifully. And look at this. So we absolutely crush through these highs, and do we touch it? Yeah, boom, right there. Now, is there anything that we should be aware of? Well, look at this right here. We touch into that zone, right, which is a key level. We're making higher highs right here. And on the RSI, we actually made a lower high. Not confirmed or anything yet, but it's just an extra confluence to say, okay, well, we should be cautious because we do have a POI here, and now we're diverging. So potentially, if we see any sort of move out, or potentially if we have any sort of confirmations that are personal to our trading strategy, that you could potentially take them from right at these levels. Okay, so these were the potential opportunities, at least for me today in London. And then ultimately, and also I should just change this to say lower time frame, buy model. So now we have we had everything there, right? POI, price action, time of day, and then our lower time frame confirmation. Boom, 3 things, keep it easy, right? But now you just have to understand what is your lower time frame confirmation, and then there's 3 things that go into that as well, right? So 3 things that go into that as well, or maybe even more. Ready? We're gonna have a consolidation. We're gonna have a sweep on liquidity. We're gonna have a break in structure. We're gonna have an inducement. And then we're gonna have return to order block or whatever POI that you're using, okay? So we actually have 5 things there. So 1 to 3 or 3 things here on from a higher time frame analysis, and then for our entry we have 1, 2, 3. Keep it super simple, right? And so this was super simple. What did we have? Our consolidation right here. We had a sweep on liquidity right there. We had a break of structure right here. We had our inducement right here. We had that return to the order block right there. Okay, that's it. Keep it simple. So that was that trade on EU for London open there. And then, yeah, right at about 4:20 a.m., we actually just had this basically cascade down. There was literally no entry on this to get into shorts here. But because we bounced off that and then we broke the 15-minute structure like so, and excuse my dog, guys, he's probably going to get a little bit rowdy right now. I think someone just knocked at the door. Because this is our 5-minute sweep or 15-minute, sweep and break of structure. Well, then this is our extreme level, right? We're returning back to an order block. Now, in hindsight, what I can see is that look at how it came down. Does this not look like what I was saying before about how we have our sell model right here, where we have these equal lows that were formed? Additionally, we have a very similar looking buy side to the similar looking sell side. And then we look at where this correction forms on this side. Look where this correction forms on this side. Look where this correction forms on this side. Look where this correction forms on this side, right? So very similar. And so to me, that should have been evidence number one that I was like, okay, I shouldn't be taking any trades from here. However, what I did look at was I looked at this, because this was the last point of mitigation. And so this was a sweep. This was the break of structure. I still saw that this was a potential entry right here if we were going to continue up. Again, this is where I had to adapt and change my bias to say, okay, potentially we should be looking for sells up here. And so I actually had just an order set right here. There was another inducement right here. All these were inducing, and again, close proximity to the POI. So I had my order set right here. Again, after this one actually got stopped out. No, it didn't get stopped out from break even yet. But I just added whatever I took out of partials. I added it again right down here. Okay. And so this is what I did. This was what I did in London today. And then it ended up going super well. I thought I was, a moon boy here. I thought I was going to go right up to the moon. I thought we were going to kill it. And again, this was my week high based off of my 15-minute, again, consolidation, sweep of structure, breakout. Where's my inducement? Here. Here's my key POI. Here's a little imbalance. So it had really everything. I just wasn't aware that this was a sell model, because if this is the sell model, or I was aware of it, but I was like, I still think that this is going to go up. Just very unaware of how strong this level was right here that we bounced off of. And so, yeah, we have equal lows right here. And again, this is a beautiful sell model. So now, again, where are we getting that reaction from? Right down here, probably equivalent size run, and then back down to start taking out these lows. And that's exactly what happens. We actually get up to where is it? Yeah, right here. 15-minute or 5-minute POI. It's also this hidden base right there. And again, if we're looking at it from this time frame, from a sell side perspective, what do we have here? We have a high here, we have a high here, we have one candle, two candles, sweep, break back down. So to me, I should have been a little bit more aware of the fact that this was, again, this one right here, I should have took profit right here, because there is potential. I should have took partial, is because there is potential that this is going to come back down from here based off of how it's respecting price action from these key levels up here and how prices reacted. So again, just a little bit slow day today for my brain, to be honest, but it's all good. It is what it is. Sometimes it's not, you're not going to be perfect. So it's all good. You can see right there, come back down. And yeah, I mean, we literally consolidated beautifully, like right here, right? Where we have this inducement to what? This little imbalance up at the top here. It's just the wick, the last wick that was just never mitigated on this candle, right? We had an up candle. It dabbled into a little bit and broke back down. You can see that it respected the body right here, came back down, but then it wanted to dig deeper. So where is it going to dig deeper? Well, it's probably going to dig into this wick, and that's exactly what it does. So yeah, if you look at the 15-minute, again, dabbles right up into that zone. 30-minute, 1 hour, you can see rejection block is right here. So look at how that 1 hour closed, right? That 1 hour is just beautiful. Like, it looks bearish as hell. And so I should have caught that before. You can see that this was the rejection block on the 1 hour, lining up beautifully with this level right here that swept liquidity and broke structure and was induced. So this really had a lot. It did wick through it a little bit, but again, I don't put my stop right at the high here. So, but anyways, if you got wicked out of that, then I would be essentially just waiting for this imbalance fill or somewhere up in this wick to get filled before coming down. Again, clean leg. It's very highly likely going to retrace at least back down into here, at least. So let's just see what happens. And you can see what happens. We mitigate what, 50% of that wick. Yep. Right back up to that rejection block and start coming down. So that could have been even an entry if that's one that you take there. If you missed this one here, sorry, you missed this wick up into it, or you got stopped out with it, well, you could have just re-entered again right there. Okay, and look at that. It just absolutely dies. Okay, so at this point, let me just take everything off here. At this point, we should be absolutely bearish, at least until the body, right? The 4-hour body. Why the 4-hour body? Because again, this is a 4-hour candle. This is going to be a 4-hour order block. We also front runned it with this candle right here. So this could be sponsoring the liquidity to here to get a deeper retracement back up into this wick or something, right? But overall, we should be bearish on the, at least until lower time frame structure has been broken. So now that this has been violated here, this is bearish. So the next area I'd be waiting for is down here. Wouldn't want to be taking any other trades until price gets down to here, which it does right there. Okay. Again, right at 8 a.m. So right at the New York Open, but you can see like what New York or what London did was it swept down, it swept up, and then it continued. So this should be the true direction of the day. It should be downside now at this point, right? So what we want to be seeing is at this point, retracement, and you can see on the 1 hour, this is what I was actually looking at, because I was going to actually go long here, but I was like, the reason why I don't want to is because look at the range. Like we're at the 4-hour OB, and it's right here, and I only have this area, so 6 pip range for the next point of interest. Like it's just not enough. But I'll show you what happens on the 1 minute. It made it super enticing to potentially look for some longs up into this. If you're a scalper, then I mean, this is definitely something that you could have potentially done here, right? So we have a 4-hour OB, again, higher time frame. So what are we waiting for? Lower time frame breaks the structure. Boom, right there. Right? Again, this is just a wick break a structure. So sometimes like it's probably best especially if you're starting, to wait for a break of structure that has like a significant break as opposed to just one tiny wick before it. But the thing that I liked about this was we had this order block right here that caused the break of structure, and then it comes right back down into it, fills up that imbalance. That's a continuation structure for me. So again, another model right there that you can enter on. If you wanted your stop to put right underneath, you could do that 1.5. I personally wouldn't take anything less than 2. So again, it just wasn't right, the risk to reward, but you can see that it worked out beautifully, right? Worked out beautifully. Again, we know that there's a sweep here, break in structure. We know that we have our higher time frame point of interest right up here, and we know that we have an inducement, potential inducement right here. So that's what happened. We swept above it, and then again, just like I said before, on the higher time frame, is that you had this portion was broken right here, right? And if this is a sell model, right, you can see that same similarity, that symmetry on either side. If I draw a straight line down it, boom, you can see that symmetry, straight line, breaks below. You're going to be using this point of interest as a test, as a point where price is going to test. What else is there within that? It was a clean leg. So we had our fill right here, and we have our hidden order block right there. So again, if you were really biased, if you're biased to downside, this could have easily been a trade that you could have entered on. Again, you can put your stop 2 pips, or I would just put it potentially above this high. Shouldn't get above that. Okay, and that's that. Where's my targets? Well, definitely you're going to be wanting to take profit in anywhere around down here, right? Because this was the news event that came in right here. So you want to obviously be taking your profits somewhere around these levels. It was actually right here because it is a down candle. That's when it opened. So you can refine it a little bit more if you want, of when did the liquidity actually get pumped into the market? Yeah, it was right here. It was right here. Okay, so that's where I would be looking at, and you can see that that just happened beautifully. And then if you wanted to hold it further, well, of course, the next target for me would be daily lows. Daily lows are going to be where there's a significant liquidity pool. And so, yeah, I think that was basically it for the day. It's 9:30 stock market open. anticipate manipulation at this time. We just took out a previous day low by how many pips? Almost about 10 pips, potentially 10 pips that it's going to be. And then what happens? We left this clean leg. Look at this. It went down clean. So essentially we had this inefficient price action reaching down for liquidity. Where is it? Well, there's going to be one here. You can see we got a little bit of a reaction off that. And then we went down again. Where? To below where this liquidity is. Definitely going to be liquidity pooling here. So what we can expect is price to be more of an efficient move, at least to fill up some of that imbalance. I talked about it in one of the WWA review videos where there was an imbalance going into a weekly high. And there were some short opportunities at that level to fill back that imbalance, right? And so this is a very same thing, but it's just on the buy side as opposed to the sell side. So again, now we're in this liquidity pool. So what do we have? We have timing is on our side, right? 9:30 sweep, right? New York Stock Exchange sweep. Now let's wait for a sweep on liquidity, break in structure for us to confirm. Let's see here. Okay, so now we break up. Is there any 5-minute breaking a structure? Well, let's see if it does it. No, it doesn't. It goes just straight back down into it. So it's just a 1 minute. It seems, yeah, I don't really have a point of interest, honestly, to be right here. Like maybe this one, or maybe just the last down candle, to be honest. This one isn't as clean for sure. But let's just see how it plays out. Definitely anticipating it to go up. Okay, so right there, you can see that. Was this mitigated? No, right there. And look at the proximity, right? You can see the proximity of this inducement is literally right above it, just never tapped it. So yeah, this would go up from right here. This was the inducement. We had consolidation, sweep, breakup, inducement, sweep, inducement right into the POI. So this right here, this in itself could have been a great trade to start targeting these equal highs to fill up some of this imbalance up here on a 15-minute clean leg. So let's just see if that happens. I actually got off the charts super early today, so I wasn't even on for this. Yeah, okay. So just, again, just textbook. I mean, we sweep daily lows inefficiently. We didn't really get the best buy model here, to be totally honest, to be fair, but you know, it ended up working out. So that's basically it, guys. I mean, this was pretty in depth of what my decision making was, and also where the trades actually were. There wasn't really much, honestly, to get in on the shorts unless you took that continuation short from right around here after you saw that structure was flipped. You could have potentially been aggressive off of this entry here. However, that's not what I would have done. You could have been aggressive off this entry again, which was something that I wouldn't have done. I was looking for buys until this failed. As soon as that failed right here, you can see breakthrough, retest right back up into it. That's going to be the trade that I want to be taking. This short should have been the one that I took for the day after getting partials taken out here and then break even on this long here. As soon as that failed, I could have got in a good like 7-8 R, probably even more, to catch that down there. So that was basically it for the day. You can just see it was just a Monday today, so no worries, right? We still have the whole week. Not worried about missing a trade. Just learn from it and grow from it, and that's literally all you can do at the end of the day. So essentially, what I'm going to be doing is let's see what tomorrow brings. Let's just see what tomorrow brings. I still think that this low is going to get taken out, to be honest, for the week. We have, I believe it's a weekly low, if I'm not mistaken, as well. Let me just pull this up. The weekly, yeah. So this was last week's low as well. So again, remember what's going to be under here. This could be liquidity, right? Last week's liquidity is going to be resting under here. So I would not be surprised to see this come back under here. This is just building up more and more liquidity. Come back down one more time. Potentially this comes up one more time up to here first and then comes back down. But I think by the end of the week, this low is going to get taken out. So that's my analysis. I guess we'll wait till tomorrow to see what's going to happen. And I'll do another review tomorrow for Tuesday. So make sure you follow, subscribe, go check out the Telegram channel as well. At the end of the week, I'm going to be posting all of the in-depth breakdowns of the day and of the weekly cycle. I'm going to be uploading all of the what's it called, analyses and everything up there. I'll even throw in some trades that I take just on my account, so you can see that I'm actually taking them. I'm not just saying it. So, maybe it'll, I don't know, prove that I'm actually in these trades and not just someone behind the computer pretending. So, all right, guys, I'm pretty gassed. So I hope that added some value into your trading, and I hope you got something out of it. Sorry, I kind of went on a couple tangents and everything there, but anyways, I hope it added value. I'll be a little bit more concise in the next one, I promise. All right. So I'll catch you guys in the next one, and yeah, cheers.